Welcome to This Week in Money. I'm Jim Goddard. Today, Inc. Research CEO Ted Dixon on what he feels are over and undervalued sectors to invest in. Bargain hunters might be disappointed. Financial planner Richard Knowles says other cities might have surpassed London as world financial centers, but you would never know it if you visited London. We talk to Ted Dixon right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Ted Dixon, CEO of Inc. Research, and a guy who keeps his eye on just about everything that has to do energy, the markets, the insiders, the outsiders, and what the hell is going on, what's really the true value of something and what isn't. I think, though, the focus you want to look at is the TSX, or I should say the Toronto Stock Exchange. It's over 14,000, and they want to go higher. Is that possible?
Well, thanks, Jim, for having me back on the show. We're at a pretty important level here on the TSX Composite Index. It's just sort of nudged above 14,400 this week. Now, the last time it tried to do that back in 2011, it failed to go through. At the time, back in 2011, insiders were selling heavily, more heavily than they're selling now, actually, in terms of their ratio of buying to selling. There were very few buying opportunities they saw back in 2011. The selling is not quite as strong this time around, but it's still significant. It suggests to us that this 14,400 level is starting to look a little toppy. Now, that's not to say it can't go higher through momentum. It's just that insiders have decided that instead of waiting for May to sell, they're going to sell in April. They're taking money off the table. It's that old adage, you never go broke taking a profit, and that's exactly what insiders seem to be doing right now.
Where are they going to put that money?
Well, one can only hope that if you're running a car dealership or you're a home builder, that's where the money goes to. So we'll have to see. I don't detect any sort of movement within sectors in the stock market. All our indicators and sentiment indicators for the Canadian market show that every sector is either overvalued or fairly valued, with the one exception of mining, and that is primarily due to the gold. So there's just not a lot of bargains in the stock market right now, and insiders are bargain hunters. They are not generally momentum players. They do not sort of buy into I'm going to add to my position because growth is going to get a little bit better next month, or that we're about to head into a positive economic cycle. They buy when they feel their stocks are cheap and that they have a high degree chance of making money. So they're value hunters. They're not momentum chasers. So this right now is not a market for value hunters. It is a market for people who believe that, the U.S. economy is going to keep motoring ahead, and that the U.S. Federal Reserve has got everything just about perfect. And of course that any of these escalations you see between the Ukraine and the U.S. will not really affect things very much. So to add new money to the stock market right now, it's definitely a strategy for optimists and for those who believe in the growth and momentum stories.
What kind of an effect have the sanctions against Russia had? Because, every time we do something against them, they're going to try to do something worse to us. Who's going to win this, or can you never win a trade war?
Well, the big winners, I think, are the media, who have a lot to write about, if this escalates. Aside from that, I can tell you that Canadian energy insiders are taking money off the table at a furious pace. They're selling into this strong commodity rally that we've had in terms of the natural gas and the energy and the oil price over the last few months. With oil sort of hovering around $100 a barrel, they're selling into that, which to me suggests, yes, the oil price could continue higher yes, natural gas could stay high, but a lot of insiders are saying, thank you very much. This has been a very good period for our share prices, and we're going to take some money off the table, and we'll just see what happens. Now, it is important to recognize that insiders do have the advantage of being able to reload their positions through compensation plans. So it's not like to add to their position, they have to go in and buy into the market. So they are at an advantage in terms of their structures, their compensation structures, so that they're able to sort of get in and out a little bit easier than the average investor. But the fact of the matter is, they're not waiting. I mean, they're saying, okay, the saying is sell in May and go away, and they're being a little bit more conservative. They're selling now and taking money off the table. So something to keep in mind. The rule of thumb is that insiders are usually early. So that's a good news for investors because they can see what insiders are doing and then make their own assessment. It's not usually necessary to sort of jump in or out right alongside of them. The one exception to that, I would say, is during really strong market moves, like huge sell-offs or huge rallies, such as kind of what we saw sort of in the fuel cell stocks a few weeks back. If you see a lot of insiders selling near the peak of that, well, then that's probably an indication that now is a very good time to take money off the table. But in general, usually insiders are a few months early, and we may be seeing that this time. So it's not a case of necessarily investors having to rush for the exits, but certainly if you're looking to put new money into the market, just be very picky and make sure that the companies that you're looking at have very strong business propositions, very strong cash flow, and they're not reliant on the Federal Reserve to keep the stock price high due to money printing and valuation expansion. We've seen the PEs in the U.S. and to some extent the Canadian market, but more importantly in the U.S. market, expand thanks, I would argue, on behalf of the Fed. The Fed is now winding back its support for the stock market. So we will see how that happens. There are some people who think that the top is being formed right now. Others feel that the top may be forming in the fall. So, no one kind of rings the bell. So one has to position themselves accordingly. Just insiders, all I can tell you is that they're not waiting for higher levels either in the U.S. or in Canada to take their profits.
Trying to guess the top. I remember going into the new year, everybody said, mid-January, we're going to get hammered. I think trying to guess the top is almost impossible right now.
Well, particularly with the Federal Reserve still pumping in billions of dollars until it has a big impact on the money supply and how the money supply ends up in the stock market, which is all, quite frankly, a big mystery. No one really knows how that mechanism works, and in hindsight, it might become apparent. So it's risky, it's because of this sort of murky impact that the Federal Reserve, the money printing, is having on the stock market. One does not know, and that should further require or prod people to be even more cautious. I mean, what is justified, when higher PEs are really justified, is when the risks are very low and that growth is pretty much on its own 2 feet, and that you have a bona fide economic recovery and a strong fundamental backdrop. And there are people who believe that, and that's the case for a continued bull market on a fundamental basis. But insiders are not confirming that point of view, so we will see. But there is a case for this continued multiple expansion, but you really have to believe that things in the United States are on their own 2 feet, that the U.S. Federal Reserve can pull its support away without having a minimal impact on the economy. It's really a big, in my view, it's a big leap of faith one has to make. But there are those who are willing to make it, and we may see higher stock prices yet. So we'll see how this plays out. But going back to how
4 or 5 years to get together one budget
in the U.S. Well, that's right. And there's
how can you trust a government that can't even put together an annual budget?
Well, and we also have a U.S. foreign policy that one could say has not really come together very successfully either. When you look at really how Putin has been able to maneuver over the past few months, or if not years now, around U.S. foreign policy. It's really quite remarkable, given the relative size of the two economies. I mean, there's no comparison between which economy is stronger and which economy has greater leverage in the world. It's clearly the United States, but one has to kind of scratch their head and go, well, what's going on here? How is Russia able to maneuver so successfly? And you got to bring the magnifying glass back to the State Department and the U.S.'s foreign policy. It just doesn't seem to be able to deliver a lot of wins. But that's just another risk out there that something could go off the rails. But it's the wall of worry. The bullish case will argue, and you always need something to worry about for stock prices to move higher, and we certainly have a lot there. So that is the bullish case. I don't want to paint the picture that the insiders have the perfect sort of window on the market. They're just a very conservative lot, and they are deciding to ring the cash register now while the times are good. And if they leave a little bit of money on the table for other people, you won't want to feel sorry for them, because they do quite well usually. So that's their perspective, and they may be early. So all may work out fine. U.S. budgets may get passed now between now and the next couple of years, and U.S. and Russia, no tensions may subside. So, things could calm down, and stocks could move higher. Highly, insiders are suggesting that's a risky proposition at this point.
What kind of damage have the sanctions done to the Russian stock market?
Well, the Russian market's been hit, but we don't follow it closely because it's just not a market we track. Although I'm not so sure that the Russian population is as fixated on its stock market as we are in North America, and I think they may have other perspectives on what they consider to be important for their society. And let's face it, they used to be a communist country, and so this whole idea of stock market and capital markets is still a relatively new phenomenon. So I'm not so sure that the gyrations in the Russian market are going to impact Putin's behavior one way or the other.
And of course, in Russia, if you make too much money, you make too much noise against the president, you end up in jail for 10 years.
Right.
It's not the kind of market we're used to.
It's a completely different society, and I think the politics, the calculations are quite different. So you have to look, looking at it through our perspective. I think it's quite different, and also their history is quite different. We've never had, like in the last couple of centuries, a war here in North America, and certainly we haven't had to put up with the type of threats that we've seen in Europe, and so the mindset is completely different. So it's I think the risks there are higher than the stock market in North America is discounting right now, but one has to hope for the best, and chances are this will all calm down, but it's still a risk. And when you're investing in the stock market, not only do you have to look at the growth opportunities, you also have to look at the risks. And as you mentioned, the insiders are signaling that risks are quite high right now.
More with Ted Dixon next on This Week in Money.
Always consult your investment professional before making any investment decision. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ted Dixon, CEO of Research Inc. Research. Why do you research Inc.?
Well, it stands for Insider News and Knowledge. that's where we get the ink from, and everything we do is on the internet. So it's a bit of a play on words. We don't actually produce a hard copy report. It's all on our website, inkresearch.com.
And when you say insiders, you're not the kind of people who were doing the micro trades in between microseconds on the New York Exchange, the ones talked about in the brand new book?
No, we focus on legally reported insider activity that is done with regulators and the Flash Boys. I believe that's the name of the book. They're a different crowd that we do not track, and I'm not so sure anybody has been able to track that crowd at this point.
Well, it was interesting to find out they were using fiber optics, moving closer to the exchange physically. So, I mean, we know that even though sound on a telephone line goes the speed of light, we've heard an echo, or if you talk to somebody in London, there's a pause. Well, if you're a few blocks away from the New York Stock Exchange, that's a disadvantage. They moved right next door just for that microsecond to trade.
Well, that's right, and that's been the one of the newer developments in the market, particularly since the Lehman Brothers crash. I mean, this has been developing now for quite some time, but it's really kind of mushroomed. So there must be some economic incentive for this behavior to happen, and we will see now that this book seems to have got the attention of the regulators in the U.S. So we'll see how this plays out. As usual, we find that it's taken some noise in the media to really kind of get action on this front. So we'll see how it plays out. But I think that the issue now will be overhanging sentiment a little bit, and it's just another area of something to worry about in terms of how it's going to play out in the market. I think it's kind of unclear right now how it'll play out, but it's certainly not something that's going to instill a lot of confidence in bringing the next retail investor into the market. They're going to read these headlines and read these stories and probably go, well, maybe I just won't go into the stock market now. So it's long term, this could play out as a negative, but we'll have to see. It's just another issue for investors to keep in mind as this sort of euphoria unfolds in the U.S. market of hitting new highs all the time. So this is again just another reality check, about what's really been driving this market higher, and you've got this type of activity going on. So it's people have to decide whether they want to continue to ride this market. It's I think is momentum based, technically based at this point, and if people feel that there's a fundamental basis for the ride, then we may see prolonged equity prices higher. But as I mentioned earlier, that scenario is not being confirmed by our indicators.
The stock markets try to encourage people to invest, but it seems, we had Bernie Madoff, who got away with murder for 10 years. The big banks knew what he was doing across the planet. I'm sure the big players have known forever that for the last, 6 or 7 years, these micro trades in the blink of an eye are taking place. Why would people put their money in the stock market when we keep finding out there are things going wrong with it?
Well, there's always going to be issues that need to be addressed, and I think that, in terms of what we're seeing with the high-frequency trading, I mean, it's good that there's now a discussion, and there'll be greater oversight in that area. But, I think it comes down to valuations. I think you put money in the stock market when prices are cheap enough that you can make money in light of the risks. So there's always going to be risks, otherwise there would be no reward. So, I think that, from someone who's investing in based off of companies with cash flow, good prospects, you look and you buy at the right price. So that's why you put money in the stock market, and you also put money in the stock market to diversify your wealth, because you can spread it across, an index, for example. If you want to buy an index fund, then you've got a very diversified approach, or you can pick your own stocks and put in your money into a number of different stocks, so you don't have all your eggs in one basket. So it'll always be there to provide the diversification element. That's critical. It's critical to wealth management. So while right now we're concerned about the level of the stock market, we're not suggesting anything is wrong with the capital structure of the market. It's just that things are overvalued based off of our indicators. And I think, there is another way to hedge some of this risk, and that is through gold mining stocks. I mean, that's the one area we are seeing some insider interest, although there has been some money come off the table there as well. So that sector may be consolidating for a little bit here, but it's a hedge. You don't want to put all your eggs in one basket. But if the Fed gets it wrong, and we do see an uptick in inflation, some volatility in the markets, and even some geopolitical uncertainty, the gold stocks are traditionally a hedge for that, and it's likely, a good idea to have a little bit of your allocation in that area as a hedge. And insiders are suggesting that, now's not a bad time to look. It would have been in hindsight better to buy a year ago when prices were lower. But at this point, there may be some weakness in the sector, some opportunities to pick up some bargains. So as events unfold, that's one area that insiders are suggesting there's still some attractive opportunities in a broad sense. And of course, there's always a company by company situations. Getting back to the idea of companies with good cash flow prospects that are trading at reasonable prices. There are always situations that present themselves. It's just right now they're much harder to find, and there's fewer of those around. So one has to be very picky in terms of allocating any new cash to the market. If you're a value investor, if you're a momentum investor, well, then this is really a different ballgame.
Everybody keeps talking about, have we hit the peak? Are you stupid to try to time that?
Well, I certainly don't have the magic formula, and maybe there's some people out there who do, and they'll certainly do quite well if they can. And I think it is a very difficult game to play, and that's the other element that one has to keep in mind with momentum trading. It works until it doesn't, and while that sounds pretty simplistic, when it stops working, it really stops working. And there's everything that had worked so well and had been a big money maker in terms of trading strategies, all of a sudden comes to a complete halt. So, unfortunately, there's not a lot of evidence to indicate when that point happens. One thing that I would keep an eye on, though, is that, eventually if the Fed sticks to its schedule, sometime this year it will stop adding all this money into the market, and it's going to be very difficult for the stock market to keep expanding its multiples on its own unless we start to see some really strong revenue growth, really strong economic activity in the U.S. trickling down into these companies' bottom lines. And so we're going through a period. I think we're going through a period of transition right now. Insiders, are signaling that they want to take money off the table. So investors should be aware that we could be transitioning from this period of ample central bank liquidity to one where companies and the market has to stand on its own 2 feet.
Ted, is there a website somebody can go to take a look at the research you've done?
In terms of individual companies, we offer a free website called CanadianInsider.com where you can see in individual stocks what insiders are doing, whether they're buying or selling. For a more comprehensive service that includes filtering and sentiment analysis, you can take a look at InkResearch.com, which is a subscription service, and it comes with a 2-week free trial.
After the break, Richard Knowles on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Richard Knowles of Knowles & Associates in Vancouver. He's a personal and corporate financial planner. He's also a recipient of the 5-Star Wealth Manager Award, something that people in your business, I'm sure, are very proud to have. Welcome to the show, Richard.
Thank you, Jim.
Well, instead of talking about Canada's financial world and what's going on, you have just come back from a holiday in London, probably the financial capital of the world. At least they like to think that. And for hundreds of years, they were absolutely correct to think that. Richard, do they still have that attitude there?
Well, yes, I think they do. I think the general formula in Britain is a centralist approach. You can see this around the world. You can go to different places in the world, and you can see whether they feel their perspective or their position in the globe is driven by their productivity or whether they are reliant on others. Here's an example. In Canada, we effectively, while we respect ourselves very highly, and that's a very good thing because we deserve that respect and certainly should respect ourselves based on, our productivity in this globe, frankly, we rely on others. So our perception is that from a governmental or philosophical standpoint, I don't like to use this word, but in a sense, in the true form of the word, pandering, I guess, is a word we can use. But we seek out the affection and goodwill and good business of others to succeed in Canada, you see. So when we look to be successful here in Canada, we look to the States, our biggest partner, and what they do, the old joke, when I was growing up and when my dad was in, the UN and working as a diplomat is the United States sneezes, basically we catch the cold. And now it's China and India and all the growing economies. We feed these economies and we rely on them to buy our goods. London is a little different. They're a lot different actually. They're a central capital of trade and commerce. So a lot of things go through London and have for 1,000 years there. And we're looking at a country here in Canada where we're lucky to hit 200 mark, But when you're looking at Britain, you're over 1,000 years back and more, clearly more. If you look at it as a central trade place, Verulamium, which is just outside of London, it's actually not Roman, it's the old British center of commerce, one of the most famous centers of commerce of the non-Roman Empire, before Rome actually positioned itself, the Romans came into Britain. Now that's before London. Londinium was the first city of Britain, one of the major British cities created by the Romans. So think back a long time. We're talking over 2,000 years that the British have been a center of trade and commerce. In fact, Verulamium, where I visited and studied its commerce and trade, traded with the Romans as a separate British trade center. Now, this is fascinating when you think about it because they've been doing this for over 2,000 years, certainly. And this is why they're very centralist. They believe in themselves. They have a great sense of history and faith in what they do. This is something we miss here in Canada. We feel ourselves so new to this world, this new kind of age, that while we're more receptive, I think, in Canada to new ideas, technologies, ways of doing things, we really don't have that belief in ourselves to be able to implement and very innovative technologies and innovative ideas. We always tend to default to see if the U.S. agrees with us or wants to do it our way. We used to be much more forward-thinking back up until maybe the 50s. Our politics and everything else was very separate from the U.S., although we worked very closely with it. The U.S., however, in the same span of time of 200-odd years in the New World, has in fact surpassed the strength of will, if you want to look at it this way, of London and of England in its control of economic control of the world. And that's simply because they have created a new economic center in the world for the last, couple of hundred years that is a place that you can make even more wealth and more opportunity. One of the big character traits differences between the United States and Britain is that Britain holds on to old ways of doing things, whereas the United States allowed new age economic growth. Now, their power struggles in the last few decades, particularly since about the 60s and 70s, they've exceeded themselves in their inability to be democratic. For example, they're currently considered a plutocracy, according to most pundits, political pundits. And a plutocracy is basically a ruling of the elite, the wealthy elite, which is exactly what it is. So democracy really is, if you will, a kind of an afterthought there. It's required to be able to hold the states together and to be able to implement laws and rules. But in effect, the plutocracy is the ruling class. The moneyed people are the ruling class at the moment. Whereas it's always been like that in Britain, to be honest. Much of the ruling class has always been moneyed people. You even look back to their insurance corporations, Lloyd's of London, for example. When you look at Lloyd's, it's not like an insurer here in Canada or in the United States. Lloyd's was one of the first insurance companies ever created. And they are listed with what they call their names. The names are extremely wealthy and moneyed people that have lent money to Lloyd's to reinvest as insurance policies to others. And the rate of return that the names receive, these individuals receive, or groups of individuals receive for lending their money to Lloyd's for high-risk insurance, is the premiums that are received by Lloyd's minus Lloyd's cut. And then that money is paid to the names, these individuals and groups, to make a profit for lending their money on to create insurance policies for others at high risk. So this is an example of things you would never see or typically not see in the New World, whereas you do see in Britain. So it's quite a fascinating difference.
Do you still see guys wearing their bowler hats and pinstripes on their way to work on Oxford Street?
Yes. Yeah, you can. It's not that common, but I did see one. Actually, I did see a bowler hat. It was really something. That's what I was talking about with tradition. You know, tradition goes a long way. And of course, the classic expression, the old boys network, that was created in Britain. It was the classic old boys network was originally created in Britain. And it was transferred over to this world, in the New World after that. You think back to the days where, the Rothschilds, the old Meyer family that changed their name to Rothschild or Rothschild. They were indeed around. When you think about the fact that Rothschild himself was going to short the stock market in London after the Battle of Waterloo. Now this is history. When we think of the Battle of Waterloo, when you went to school in Canada, think of the Battle of Waterloo as some ancient times. But this was the beginning of some of the biggest financial moves of some of the wealthiest families that exist today were being done at that time. Now, we didn't have that in Canada. Canada was not even a foregone conclusion yet, and nor in the United States. So much of the old world money has been going on for 1,000 years with manipulation of stock markets, with moneyed people, closing of banks, private money being made. This goes back a long way, and we want to look at history of banking and insurance. That's the direction we should be going, and also always should, because that's, in a sense, that is our founding fathers. That's the way we work today, and they are indeed still in control in much of the world, of the financial world. One of the biggest concerns I have at this time is the LIBOR scandal going on with the interest rate scandal in London. This big review, having a Canadian like Mark Carney, who was, our ex-Bank of Canada governor, moving over to that post has been quite an accolade for Canadians. I think a lot more than we credit, simply because the whole concept of having such a historic banking central adopting a Canadian is almost unheard of when you think about it, because of the way the old boys network works. So clearly they were trying to wash their hands, I believe, of the potential threat of this LIBOR scandal now feeding in on the Bank of England. They wanted to get their old boys out and get somebody fresh face on the front, so that they could see that something was really going on, something was really being done about this problem, and they weren't just the same old. And I think that was a very wise decision, based on that reasoning alone, to bring over someone like Mark Carney.
Did you hear any comments? Did you hear any comments about what people thought of Carney's job so far?
No, nothing that I've been able to get feedback on. I do have public commentary. There was actually some headlines. Carney was in some of the headlines because the Bank of Canada governor was being quoted as saying this or that. There was positive. The one point and this is one thing you always want to look to see, what's the feeling of the people. You can look at the magazines, because the magazines really do rule a lot of the people there. How they might feel that day. But clearly there was a positive tone in all of the things I had been reading about Mark Carney. So they weren't, slamming him or anything. They were really being sponsoring him in a positive light. And for a British group to do that, they're very, very self-aware, and in fact, very. I don't want to use this word improperly, but I mean ego-oriented. They are very proud. I think that's the best word, of themselves. The British people, they're very proud people. They work and slog things out together, and they believe in their heritage very much, and they're trained to, in most cases, believe this socially. To allow and to be so positive about an outsider, even though Mark Carney is a Canadian, he was trained in the U.S. in banking, and he, at Goldman Sachs, and then he comes back to Britain. They they can embrace him because it's like one of their own. A Canadian is kind of like a expatriate Brit. They still sort of can see that, and they can accept that. But I think it still rubs them a little bit the wrong way to have someone who's not British-born, trained, and through their system up there. So that can bother them, I think, to some degree. But I didn't see any of that. It seemed to be very well respected and very positive response in the newspapers.
More with Richard Knowles next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking to Richard Knowles of Knowles & Associates in Vancouver. He's a personal and corporate financial planner who has just come back from a trip to London. When I was in London last time, big controversy about the Canary Wharf development funded by Canadians, where a lot of the war damage along the waterfront in London had sat there for decades, unrepaired, and then all of a sudden they moved in, but it was a long, long way from the central part of London. And a lot of people didn't want to move their businesses out there, but now I hear it's quite successful, and they have a train line that's elevated just like Vancouver SkyTrain. It's a bit smaller and a little bit more cramped, but then London is a small, cramped place when you look at how many people are crowded into such a small area. Did you notice any differences in London from the last time you visited?
Yeah, no, I have noticed changes regularly, especially once the Olympics had been introduced, because they wanted to, of course, show their best to the world. But London, we have to always remember, is a vast, vast area. It's not a typical city the way we might see it. It's funny how Londoners accept the fact that when they go from North London to South London, it will take them a good hour and a half to get from north to south, at least, maybe 2 hours. And that's one way. When we go from north, we think of Vancouver, when you go from a north of Vancouver to a, South Vancouver, even if you were to include, if you actually look at just Vancouver, not including a Richmond, that, on a regular day would take you, I don't know, what would that take? It's about 35 minutes, 40 minutes, depending on what bridge we have to hit. So when you're thinking the kind of more vast distances and extremely large area just for what they consider one city of London, we would have broken it down in North America typically to smaller boroughs, So we would have, there would be a central area we would call the main city, like a New York, which might have its small boroughs of Manhattan and other things. But then as you go out, they would actually not be calling it New York City anymore. Even though it's just really an extension of the city, they would cut it off and it would have its own municipal control systems. It would have its own mayor and everything else. Whereas in London, they've kept this vast, vast area of quite diverse. Like from one area you could be in the country, literally you're in the country, and it's considered north or, West London. And you're out in the countryside, and they seem to be little towns, but they're all still part of London. And then you can go right down to the downtown core. So they're used to vast distances simply because they've had the underground or the tube line there for so long. So you can ride the tube for a good 25, 30 minutes, covering vast, vast areas at very high speeds, and just be downtown in no time, even from the outlying districts. So this is what's aided their perception of distances, and why I believe the whole Canary Wharf concept of discomfort for that distance or anything like that, really doesn't apply here. When you can have something that close to downtown, along the Thames, for example, that could be built up, clearly that's considered almost virtually downtown. I mean, you're really, it's as close to downtown, and to have developments of that nature, particularly where real estate is so highly prized in this area, that's why it's so expensive to buy there. Then you don't really see it as a far distance or discomfort to move. I think a lot of what we were hearing about the flack about Canary Wharf is more political than it was actually factual. A lot of the people that were very happy to have the developments put in there, because then they would have a space to go. You know, there was the old Cockney Rebels that grew there. That was part of Cockney Britain, of course, and they didn't want the changes, but they accepted it. You know, I mean, some of their history is there, but now it's more modernized. So there was a lot of politics in that. But actually,
they've converted a lot of those old warehouses into nice condo lofts as well, with a great view of the river.
Oh, it's fantastic. It reminds me of Camden Lofts and the Camden Town in London. I mean, there's so much going on. There's so many small universes or worlds within the giant London that it's almost unfathomable. Like at any given time, I could be up at some amazing suite overlooking the whole city, sweeping city, having a nice glass of wine at a reasonable price, I might add, and not being excluded because it's some sort of specialized, restaurant, hotel. There's so many high-end restaurants that it's so different from New York. There's places in New York you try and get in, you have to book weeks in advance, and if you're not on their special hit list, well, forget it. You're just not a special person. You'll never get in. It's like that in L.A. You can't get into certain restaurants because they're just only pandering to the high-end elite people. Whereas in London, there are so many high-end places. And, to be honest, the people, even the high-end actors and actresses and high-end wealthy elite, they don't mind being, in the same restaurant with reasonably regular Joes. If you can afford to be there, I was sitting, around a couple of famous actors and actresses that were just around the corner. They don't exclude as deeply or as viciously as I often think in places as they do in, say, like New York and L.A., than they would in a place like London that you might expect it. They're very welcoming, and I could be at any given pub, and there's so many places. And the one thing about London is it's its own infrastructure. It's its own economy. It stands alone as an economic base. Outside of what Britain is doing, London itself has its own life. So you can go there in the middle of the worst global recession, and you'll see the restaurants full. I remember one comment, and I don't know if I mentioned this from my last trip. I went into a restaurant when it was pretty deep in the recession, and they were completely stacked full. It was kind of hard to get in, but they had a table available. So we sat down, and I looked at them, and with all the noise and all the rumbling, and at every restaurant that we passed, it was always like this. I said, wow, it doesn't seem the recession is hitting you here. And they go, oh no, it is. We normally have lineups going outside the doors, so now we only have one space available. And I had to laugh, thinking this is not a famous restaurant. It's just a restaurant in the area, but it's very popular. And there's obviously, yes, granted, it is affecting people. They're not maybe eating out as much, but there's so many people there that it really starts to make you, see the universe in a different manner walking down the street. And walking is a great thing in London, too. While you can drive and be driven around, and there's even an extra cost to get into the city during the working hours. You have to pay to get in. The reality is that many people that work there They don't drive around. You might drive around if you were visiting, you didn't know where you were going, you needed taxis, etc. But frankly, even some of the top business people would take the tube, depending on where they're coming in and what day they're coming in and what time. So it varies. It depends on who you are and whether you want to see and be seen. But at the end of the day, moving around London, walking around London is just a part of being in that city, and it's a part of the business as well as the casual part of life there, which I think is a great integration that we don't have here. We do in Vancouver, but I'm talking about North America in general. A lot of people regard business and their business worlds completely separate from their personal lives, whereas I think they understand in the old world, European or perhaps even in other parts of the world that I haven't been to, that you want to integrate your work with your life. That success is letting the job be a part of who you are as opposed to separate from who you are. And that, in that way you can enjoy your life even while you're working. Work doesn't become a trial or tribulation anymore. A trial anymore. It becomes an enjoyable thing to do. So I find that that's a vast difference in philosophy that I think we could adopt.
It's true. Vancouver does have very much of that. I heard that London, and again, they call it the city. We say downtown. In London, they say the city, where the newspapers are published and all the financial houses are. At night, there's maybe about 5,000 residents. During the day, there's 5 million people there.
Yeah,
you know, it's
right,
incredible how deserted. And the great thing about London too, and you said walkable, although on a map it may look like things are a long way apart, you really can cover a lot just walking.
Oh yeah, it's incredible. And I wouldn't suggest that it's empty at night. You know, while there may be 5,000 residents, it's alive. And if you're looking at the city part, you know, the main, what we might call downtown, or the main parts of the central area, that's alive almost 24/7. You'll find it stacked. The streets are, you know, filled all the time now. It's incredible, especially in certain areas. They might go, you know, Covent Gardens, Soho, other areas. It's always action, activity going on all the time. In fact, it's overwhelming. For some people that don't like crowds, I would say London's not really for you. It's something like for some Vancouverites that have been to the Pacific National Exhibition on the highest, you know, the PNE during the summer months and when the PNE's in town. I'll tell you, that's, you know, wall-to-wall people walking along. It can be like that. And
I was going to say, Oxford Street, sometimes you feel like you need shoulder pads to get through.
Oh, yeah, and if it's raining, oh, forget it. The umbrellas, you know, oh, my gosh. You know,
You'll lose an eye. You'll lose an eye easily.
Yeah, there's an etiquette for carrying your umbrella and how to, you know, who raises it and who doesn't, etc.
Just like passing yachts. Who gets the right of way? Well, Richard, thank you very much for talking to us. It's been great hearing about London. Is there a website somebody can go to find out about Richard Knowles and Associates?
Yeah, certainly. I have a business card website. It's richknowlesfinancial.com, and you can certainly visit me there and have lots of links to very usable areas and other websites that I'm affiliated with in my firms. Working capital, how to calculate retirement assets and mortgages. We have all sorts of working calculators, as well as lead-ins to certain websites that you can set up a stock program if that's what you'd like to do for yourself and monitor that, and just general information websites as well, and LinkedIn, and a bit of background about myself, and contact information if you'd like to know more.
Thanks to our guests, Ted Dixon and Richard Knowles, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.